We're over to Europe now, where stock markets are heading south tonight as investors fret about the German-French grandstanding earlier in the week that delivered, well, what? I'm joined now from London by Tom Vosa, National Australia Bank's Head of Market Economics in Europe. Tom, welcome to the programme.
Thank you very much.
Now, Chancellor Merkel and President Sarkozy, no Eurobonds, no fiscal union, no boost to the Stability Fund, no change in the ECB's mandate. I'm surprised the markets didn't react more negatively.
Well, clearly the biggest shock was the imposition of a financial transactions tax. They hope to write to the European Commission and have something by the end of 2012. Now, this could either be the so-called Tobin tax, which is a percentage tax on FX turnover, or it could be something even bigger, which the EU Commission has always seen as perhaps something that it could use for centrally funding itself.
It just seemed to upset people.
Yeah, well, stocks are off 3% and financials are leading it. I think partly it's just the whole vagueness of this. There were, 5 things. We had the transactions tax. Government's going to meet twice yearly. The Stability and Growth Pact has to be hardwired into constitutions. And of course, corporation tax now has to be consolidated throughout the Eurozone. Now, the Irish aren't going to go for that. Certainly they'll wait until the British government say yes, which will never happen. So really, we're going to reopen some of the old wounds of Europe, which we had thought we'd closed.
And the British, I understand, will veto the financial transactions tax.
Indeed, they already have the bank levy, so therefore the government sees it as not needed. And at a G20 level, and for any transactions tax, you're going to need the agreement of the Americans and the Asians to stop business from flowing elsewhere. That again was vetoed. So really lots of proposals, but nothing much that we think going forward will become concrete.
And Austria and Finland seem upset as well. So what is the next signal that the market will then test? Because we've got the central bank holding the line for now, purchasing, 20 billion euros of Spanish and Italian bonds each week. At what point is the market going to brace?
Well, I think the key point for now is that we need to get the EFSF, the European Financial Stability Fund, implemented by the end of September, which was one of the first pledges of the Sarkozy-Merkel letter. Now, certainly they are trying. Merkel's already having a meeting this week with her party to try and get it passed early. But we have issues there. For example, the Finns have demanded collateral from Greece against any lending that they give to them during the fund. The Austrians are now complaining that if the Greeks get collateral, then they want some as well. So we could have European governments falling over who owns exactly which Greek islands as security against their lending. Other trigger, European bank funding. We have seen now lots of tensions in money markets. If we look at the euro swap rate, which is the rate at which European banks get US dollar funding, it's at its lowest rate since Lehman's collapse. So there's clearly a massive premium now for getting dollars. And we had one bank yesterday borrowing from the ECB about $500 million because it couldn't get it from the private sector.
And that has caused a lot of concern in the US already, with the Federal Reserve watching banks in Britain now.
Absolutely. You would say in Europe the bank stocks are falling. There's this transactions tax. If you're looking at US banks, which again are still perhaps a little bit fragile, you're going to be saying, why are you lending to European banks which could need to get more capital quickly? We are seeing international money markets jam up. LIBOR rates haven't risen in the same rate that they did in 2008, 2009, but markets are still very tight.
Briefly, I gather the 10-year bond in the UK is in record territory.
Indeed, we're either at an 1896 or 1897 low. I think the UK benefits as a safe haven. If you're uncharitable enough to think of the Eurozone as a glue factory, the UK is definitely the best horse at the moment.
Tom Vosa, thank you very much for joining us from London.
Thank you.